Good morning guys, welcome to Operation Crypto. Market update today to see what's going on across the board, and we've had a decent rise from the lows, to be honest. I mean, in the previous video, which was about 4 days ago now, I know, been a while, we've had a good pump. I was saying, look, we had two options. We need to either get back above this equilibrium, this trading area, this central trading area, and then push up. If we did look to break out from that, I would have looked for longs. I've not actually done any trades the last few days, just been too busy with enjoying the sun. But if you look at this, I was looking for either a push up there or a short position once we got below here. So it has played out now, it has played to the upside, and there's a couple of scenarios that we're looking to play here. We've come into a level of resistance which is close to this range highs that are marked down here. I mean, it can be, it could drag that range highs down there, to be honest, if you want to make it bang on and have it to the top rows candles. That would work out quite nice actually. And if we just change that EQ to there, and just move that EQ, so that's a bit more accurate there. So we could say that's the range highs that we're coming up to. Two options: we're going to short it from here, which is 22,600, and you're going to short it back down to 20,100. If we do get any closures, even on the hourly time frame above here, then you're going to go up and potentially test up that 28k region. I mean, you could even test this wick here at 26. There's not much in there, is there? There's not much within that gap, so we could really start pushing up there fairly quick. Another bearish scenario to look at though, if you're looking at S here, we did form a little bit of what you call a breakdown of this trading area, and very similar scenario could happen again. We're in a very similar pattern to what happened previously. So we could now, pretty much, like you can see, we're bouncing up and down here, and then we lost that area. Very similar scenario could happen again. We could lose this level here and then drop back down. And most people, if you're looking over crypto Twitter these days, are saying 10k Bitcoin is everywhere, and that's because it lines up with an 85% drop, which happened twice in Bitcoin's history in previous cycles. So we just have to be wary that 10k is there. Obviously plenty of levels in between. 14k is a decent level too, but we just have to be wary that it could happen. But also, usually when the vast majority of people are looking for a trade setup, kind of swings the opposite way, don't it? So for me, I'm still looking to wait what goes on at this level here. So 22,600 is the level we need to keep his eye on. If we break that and get a few closures above it, we're going to long it up to 28,500. Nothing to say that we can't come back down to and test these levels again at some point, but that is something that I'm looking at now. Also, in terms of a shorting, we could look at shorting it at 22,600 as well. So monitor it right down the hourly time frame. Once you start getting a few closures above it, could be a decent time to start longing. But we'll just wait and see, and wait to see what goes on there. In terms of analysis on Bitcoin, there's not much going on. I've mentioned this in previous videos. We're just waiting for our next major move. We're still not quite there yet. We need to keep our eyes on a few things. The DXY, which is the US dollar index. I mean, it's tough to see what's going to go on. Usually, well, not usually, but in terms of quantitative tightening, which is going on the US, you would expect that dollar just to keep increasing. And personally, I still think there's a good reason, well, a good case scenario that we do push up to around 120, which is that previous highs there back in October 2021. It's a region that I really think the price could push up to there, but depends. We've got quantitative tightening going on for at least about another 18 months yet, so that's just something that you should keep your eyes on. This morning, if you look at the Nasdaq futures, that's an area where I think it could come down, but that is slightly up on today's trading. If you look on the daily time frame, that's starting to push up. The ES, which is the SPX futures, that's starting to push up on pre-opening. It's still quite a way off opening. We're talking around maybe 5-6 hours before that market does actually open in the cash round. So futures is not always the best indicator, but with the futures pushing up, it has been dragging Bitcoin up, and we are up today 6% on today's trading, which is a decent amount. Dropping back down to 4 hourly again, as you can see, this is the area we need to really break through, and it is there or thereabouts. It would be nice to have a decent bear market rally, so we could all start to take some decent profits off the table. Markets have been very quiet. Even crypto Twitter has been very quiet. Your standard Telegram groups are quiet. Not much going on across crypto, and usually that is the best time to at least deploy a little bit of capital with some risk management in play. and see how the markets do play out. And usually, I mean, I remember back in 2018, 2019, the markets were so quiet, it was like a ghost town. And then out of nowhere, we had the pumps, and then the real rise began. We obviously had major dumps with that COVID-19 2020 crash in March. But on the way up, you always get crashes, and it is what it is. So for now, I'm in a few positions. I've bought some Metis at $19. I'm looking to sell that here at around $28.90. I've got it marked up. It's a level where it was resistance, resistance, and resistance 3 times. So I will be selling Metis if it gets around $28.90. So fingers crossed that does play out, and we can get a little bit of profit taking there. Ethereum's been the standout, which is, I mean, this was a range-bound price action down here, and we blasted right through it, didn't we? We've got the next level marked up here at $1,547. It's a region where hopefully the price can push up, but this green band is a level of resistance that we're currently sat in. Break through that, and you can see it's a major support level in the past, which is now support resistance. So that's an area where I think the price should go. If we break above that, then you're looking at this major area of liquidity around here, around $1,700. So it would be nice to get $1,700. If it did push up, then you're going to really start to see some growth back up to 2,300. But I still think it's very early days, and this pump, we shouldn't get too excited about it, because the market will lure you in. It'll pull you into this feeling of, right, the markets are bullish again, it's starting to come back, and then it'll just slam it back down. So just be careful if you're looking to buy anything. Even in a spot position, have some safety net in place, whether it's a 5% drop, or monitor that. If you start coming into profit, just bring a stop loss into play, and just bang that into your entry price, and then it gives you that risk-free trade, doesn't it? And that's even in spot buys, or even leverage buys if you're doing it. I wouldn't recommend leveraging this market, to be honest, right now, unless you're well versed in what's going on. But that's it. That's my thoughts on the market today. Just some quick thoughts there. If you're new to this channel, please make sure that you are subscribed. Hit that like button, and I'll catch you next time.